You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Everybody, that music means we are back once again here on the network, rolling out the old interview cart. You thought we were done after the explosion of interviews we did down at the Options Industry Conference. Glad to see so many of you are enjoying those. Most of those are still up on the pro side. Some of them have started hitting the network already. More to come on that front, and indeed more to come right now on the interview front, because we are not done, listeners, not by a long shot, as we welcome to the interview program for the first time a newcomer to the program and indeed to the network. He is Sam Nofzinger, the GM of Brokerage and Crypto over there at Public. Sam, welcome to the Options Insider Radio Network.
Thanks so much, Mark. Thrilled to be here. I was getting a little tired, so I appreciate the intro. I got to listen to this thing every afternoon.
Get you fired up a little bit to start your day. Yeah, that's our goal here, to get all of our guests fired up. It's a fun way to start your day. Have a little entrance music, a little bit of a fun intro. But Sam, as a first-timer here on our network, let's kick you off the way we typically do. Give our audience a bit of an overview of your background in the brokerage and indeed the option space, as well as what the GM of Brokerage and Crypto does over there at Public every day.
Great. Thanks so much. So as stated, I support the brokerage team here at Public. For those who don't know, Public is an investing platform, mobile first, also on web. We make building a multi-asset portfolio, really frictionless and really easy. So on our platform, you can buy stocks, options, bonds, crypto, alternative assets, all within the same place. You can access, real-time data, fundamental data, all the tools you need. We actually have an AI, product in the app. You can chat with them, learn all about the different companies on the platform and what it thinks of things. So while we are a multi-asset platform, definitely, options and stocks are bread and butter, as most trading firms are. We offer zero commission trading, and actually we're the first firm to give members back a rebate on their options trading. So with every trade, folks can earn up to 18 cents, per contract. So my background, it's been here about 2 years, managing the, all aspects of the brokerage and crypto side, from kind of, back-end operations to, marketing, legal compliance. Before this, I was at SoFi for 4 years, running a lot of their investment divisions. And I started my career managing money for very wealthy individuals at a family office. So I have a lot of different, experience, both from just a general investing standpoint, but also I've been in the retail game, since it got popular, way back in the day. And it's been certainly a fun, exciting run over the past 6 years.
Has been quite the roller coaster ride the last 4 years, certainly post-pandemic. Since this is the first time we have a public representative on the network, I have to start before we get into some of the other stuff. Sam, I have to give you folks props. You made one of my favorite brokerage commercials of all time a few years back when you had Michael Bolton sing about payment for order flow. I will never forget that. One of the more obscure topics in the business. We stopped talking about it years ago on the network. It seemed like it was too far down the rabbit hole, even for our listeners. And then lo and behold, Public comes out with Michael Bolton singing about payment for order flow. I still listen to it every now and then, Sam. It was a catchy tune. So I tip my cap to your team over there at Public for catching my attention. It's hard to do these days, Sam.
Yeah, no, it's funny. That thing went viral. And to this day, we still have a lot of people, watching that, commenting. I've got folks on the street who've come up to me and said, "Hey, I remember you guys from that, those boat videos." So, yes, definitely. We have a lot of fun here. And that's a lot what investing is about. Having fun and, making money and making sure that, your needs are met and going forward.
All right, let's get into that meat now. Obviously, you're talking to us now because Public very much getting into the options game. So let's start there. Why now? Why is Public launching their options offering now?
I think a lot of the reason is because everyone wants options. It has been our most requested feature for the past 1 to 2 years. And as you started out, we do not accept PFOF. And so when we thought about, rolling out options, one of the biggest things, for us was, how do we roll it out? How do we differentiate ourselves? We don't want to just, roll out options and just be the same as everyone else on the street. And given our background, being very transparent, not taking PFOF in the equity space, we said, hey, how can we actually design this to be a better product than just kind of, a copy pasta product? And so we really took a long look at the market, spent a lot of time talking to the industry players, and figured out, hey, PFOF in the options market is more of a thing than in the equities market. It's a little bit different, and you can't get away from it. And so we said, what? If we're going to get the best prices for our clients, we have to accept PFOF. But if we're going to accept PFOF on the option side, we're going to be very transparent about that, and we're going to give you half of our revenue from it. So if we make $1 from PFOF, we'll give you $1 or $2. And so that's kind of what took us a long time to figure out. How do we actually align ourselves with investors? Keep up this transparency and kind of this investor first mentality that we've had, and really design a product that we think is kind of a best in class product out there. And so I think that's why it took us a little bit longer than some of our folks might have wanted. But in January we launched it, and it's been going great. We've gotten really positive feedback on it since then.
Well, we always get excited when there are new entrants coming to the option space. It's been a little dry on that front the last few years. And the ones that we have seen, the ones we have talked to, many of them have freely admitted to me off the air that they're really just getting into it. Their heart wasn't really in the option space. They were really just getting into it because they saw an opportunity to potentially be acquired down the road. So it's always hard to get excited about those types of ventures. But you guys are coming into the space with something unique, something different. We always like that. You mentioned the rebate. That's really kind of your point of differentiation right now. So let's get into that. Let's say I'm a customer, I'm listening right now. How does that rebate work? How much can a typical customer collect on an average trade?
Sure. So when we first started out, for the first 3 months, everyone got 50% of what we collect, which worked out to about 18 cents per contract. So if you sold one contract, you would see your trade reduced by that 18 cents. It would cost you 18 cents less. When you sold that contract, you would get 18 cents more than you otherwise would have, at a different broker. Because the options market is really efficient, whereas the equity market, folks are routing everywhere. In the options market, every trade has to go, to the exchange. So it's not like, there is, different prices really among the different competitors. So if we're going to give you, an extra 18 cents per trade, you're probably going to get, very good execution, if not the best, through us, just given, that slight little difference and how efficient, these markets are. And so, going forward, I think we start at 6% per contract, and you can work your way up to that 18 cents, if you refer members.
Okay, so it's not 18 cents out of the gate. You have to kind of work your way up to that level. And I'd imagine it also varies depending on the exchange, on whether you're making or taking liquidity. How does all that impact the rebate?
It doesn't actually impact it at all. And part of, what we spent our time doing, was talking to our different, market makers in this market, figuring out, a good construct that worked well for us and that was very easy to understand from not by us, but, from our members. So you're absolutely right. I think a lot of times, folks have different rates depending on, where the trade goes, what they're trading. But we said, what, why is it? Doesn't matter if it's complicated. At the end of the day, $1's a buck. So let's just kind of average it all out and just say flat, hey, every contract you trade, you're going to get, half the revenue. And it's always going to be the exact same amount.
That's interesting. So I assumed it would vary depending on whether you're making liquidity, taking liquidity. Anybody who's familiar with the space knows the rebate game is many-layered and complicated. So you're just taking that layer of abstraction away, and it's just a straightforward percentage. No matter whether you're opening, closing, making, taking, no matter what exchange it goes up, it's going to be the same.
Exactly. I think that's part of what we're doing, right? We're kind of exposing the underbelly of this really kind of secret part of the market. So if you go to, if you're trading on different brokerages, you don't know really where your trades are going. You don't know how much your brokerage is actually getting paid for your order flow. You don't know if they're making more money on AMC or GameStop or Spider. But with us, right, it's very transparent, right? We tell you right up front, hey, we're giving you half of what we make, and it's always going to be 18 cents. And so I think that's part of the transparency that we're bringing to the market, is that these markets are relatively opaque, right? All the firms like us can go to their different market makers, talk about, different, arrangements they want. And sometimes that's in the benefit of the customer. And sometimes maybe, right, it might be a little bit more leaning to the firm. And so we said, hey, we don't want any, conflicts of interest. We're going to be transparent, honest, open. We're just going to give you half of what we make and call it a day.
Well, you mentioned this was the #1 most requested feature, launched a few months back. So we're still in the early days here of the options launching. What has that response been like from your customers? Are you seeing a strong uptake? Are a lot of people trading options? And more interestingly, to a lot of our listeners out there, what are they up to? What are they trading? Are they just buying calls on all the Mag 7 like the rest of the market? Or are there some intriguing trades and liquidity going up there?
Yeah, it's funny. So we launched in January. And so you're right. It's only been about 5 months, but there's huge learning so far. Right out the gate, it was interesting to a lot of different people. We had, 10 to 20% immediate uptake with our current member base. And keep in mind, a lot of these folks had just been waiting for options. They may have traded elsewhere. So the second we launched, right, they were able to come to their preferred broker and trade them, through our platform. So really excited to see that. And then I think, it's all over the map, I think, where these trades come from. And just like every retail investor is different. And then even within the retail investor, their portfolio is different. So we have a lot of folks who not only have AMC, they have GameStop, but they also have a fair amount of, VOO and have a, very balanced portfolio. We offer, direct investing in bonds. We have a lot of folks buying crypto, but also buying treasury bills. So it's hard to really paint retail with a really broad brush, but I do think we've seen, some pretty big trends this year emerging. I think, first was crypto. Crypto really popped off in the beginning of the year as the Bitcoin ETF news heated up. That's continued to this day. Right now, we have the Ethereum news. So Bitcoin, whether you're trading coins, whether you're trading the new ETFs, has been extremely popular. Whether you're trading, companies like MicroStrategy, or some of the miners, that's been a very, very hot trend. A lot of buys and sells there. Similarly, I think, just the AI boom, NVIDIA has been, has overtaken Tesla as the #1 traded stock this year. Tesla had that post for 4 years straight, pretty much. Now it's really NVIDIA's game. NVIDIA is the hottest play in town, whether it's stocks and even more so on the options side. And especially around earnings season, right? Not going to be surprising to a lot of folks. We really see those contracts peak up. A lot of people trading around those earnings days. A lot of people taking positions, whether it's, to the upside or the downside. And so really there's a lot of folks who have different views on where this has gone. Has it gone too far? Does it have more room to run? And so really the AI boom, the microchip boom, that's been another, huge thing we've seen. Electric vehicles have come back. Those have been extremely popular. So batteries, and a lot of like the electric vehicle companies, those have been very popular. So those are kind of some of the trends we've been seeing. I think mostly folks are on the buy side. They want to see things go up. They're taking, small dollars and adding leverage and hoping that, things are better than they expect. Sometimes, we have seen a lot of people when there have been really, really, really big movements, they will take the other side. So when DJT popped those first few days, we saw a lot of puts on DJT. Similarly, I think, when GameStop, popped earlier this week, there's a lot of people cheering, because they made money. But a lot of people are saying, hey, what's going on here? I don't think this should be up, 100% in a day. I'm gonna take the other side of this bet. And so you're really seeing all different, theses play out among all these different names, and there's someone on every side of the trade.
Quite often when new brokers enter the options space, they enter it with a very scaled down offering. You can come in, you can pretty much just buy calls or puts. Maybe you can do some basic debit spreads, but that's really about it. What can we do on public right now? Is it just buying some debit spreads and maybe some straight single leg options, or is there more available on public right now from an options strategy perspective?
Sure. So we've been super busy at work. As you said, right, a lot of folks come out, first with a watered down version. I don't think we would have that But when you're at a tech firm and you have you got to put your resources. I'd rather come out with strategies as we build them as opposed to waiting for a big bang at the end. And so we certainly launched with, I think, the easiest thing for both us and our members to understand, straight purchases of calls and puts. We've expanded to covered call and cash secured put strategies. So really giving our members who really want income and value safety and conservatism, they now have the ability to affect kind of their outlook using cash secured puts and covered calls. We will be launching basic debit spreads in the next, I would say, 4 to 6 weeks. Then after that, credit spreads, call it a month or two behind. So I fully expect, and don't quote me, I'm sure my engineers are not going to love it when I give them deadlines, but by call it the end of Q3, we should have pretty much every strategy available aside from some of the naked strategies.
So everything our hardcore audience can expect sometime around Q3 then. Okay. Our audience, they're a demanding bunch. Once you put it out there now, you've given them a date, Sam, so they'll be expecting.
No, it's funny. We've heard it, and then we launched these things, and then they said, "What's next? What's next? When are these coming? When are these coming?" So yeah, we continue to hear it. It's still get a lot of feedback on it, and we are working extremely hard to get these things out the door so folks can trade.
Welcome to the world of options, Sam. They are by far the most demanding bunch. Now, if you give it to them, they will reward you. They will do a lot of volume. They will do a lot of business, but they are also not at all reticent about telling you what you lack.
No, and I think we actually are one of those few firms who take it to heart and actually get feedback from a lot of different areas and act on that feedback. We've had a lot of folks over the years come and say, "Hey, I told you guys to do this," and then 5 months later you had it. Thank you so much for listening. And so we really, really do pride ourselves on listening to the customer, trying to build what they want. Our CEOs are right out there in the threads, talking to people, chatting with people. So please, if your folks want to see something different, don't think we've done something right. We are all ears. We don't no qualms about it. We love all the feedback we can get.
Well, our pro members are listening right now live. That'll go out to the full on-demand network later, Sam. Right now, the pro folks are very intrigued by the rebate. So it sounds like their ears are definitely perking up on the rebate side here, Sam. I'm sure once they start banging away on the platform, they will let you know their thoughts on all the offerings there as well. Speaking of the offerings, the other thing that our audience is very demanding for and have a high level of expectation for is tools. So they want screeners, they want unusual activity, they want to be able to model their trades and look at the Greeks and all the other things that come along with a quality options platform. So what is Public bringing to the table on the tools front that our listeners can look forward to?
Sure. So I think we've got all the standard tools, the Greeks, the charts, the historical pricing, things like that. We've partnered with a firm called Unusual Whales, who has become one of the leading kind of options data vendors out there. So we're able to curate, certainly, lists of, hey, what's popular today, what things are up the most, down the most. Because a lot of folks coming, they want ideas, right? They want, hey, what's going on today? What should I be looking at? What's an interesting trade? And so just through these kind of, pre-populated, curated screeners, a lot of our members have found, hey, I didn't know, I didn't see that was priced this way, or I didn't know that folks were buying this. Let me look into that more. So we definitely have beginning to, ramp out a lot of different tools and a lot of different helpful ways for people to find the strategy they're looking for, because we find that a lot of people come here not really knowing what to do, but searching for ideas. And so we are trying to populate different ways to help people find ideas. I think going forward, lots of things, I think on the roadmap. So we're going to have strategy builders to help you figure out exactly, hey, if you think the price is going to be this at this certain date, what type of strategy, should we put out there for you? We have an AI tool, right? I think the hope there is, hey, explain to this, this AI chatbot exactly what you think is going to happen to this stock, and it will respond, hey, you told me, you think this stock is going to, express itself this way over the following months. Here are, right, the 3 trades that you would need to do to best affect this strategy in the market. And so I think that's kind of the goalpost is you tell us what you want in plain English, you think what's going to happen, and then we kind of serve up the exact, strategy in order to, most efficiently affect that strategy that you're trying to entail. So not quite there yet, but, definitely the team working hard on that aspect of it and trying to get you into the exact right strategy, for yourself.
you think Q3 or on the same time that the full strategy offering will be available, you'll have those tools up and running?
I would say near that time, if not shortly thereafter. We should have a lot more functionality within the app in terms of, searching capability, discoverability, and then understanding what you're getting yourself into.
Speaking of understanding what you're getting yourself into, the other side of the options equation that is very important is the education side. Our audience obviously looks for that as well. We've seen some new players get into the option space, kind of denigrating education a little bit. I won't say the name of the firm, but they were at a big industry conference recently. They put up a lot of options flow, and they said long form options education, our audience doesn't really like that, so we do all of it on TikTok now. And that struck me as subpar in terms of educational offering. So obviously education, an important thing. You can't just throw people into the deep end on the options front and expect them to swim. So what is Public offering on the education side to make sure, as you mentioned, people understand what they're up to when they're trading options?
Sure. So we take a multifaceted approach because we understand that not everyone who comes to our platform is an expert options trader who's been doing it for 20 years and doesn't need help. And so, we do want to offer that education from someone who's buying their first, cash covered, their cash secured put, to someone who's enacting different multi-leg straddles. And so we have an options hub with all of, understanding the foundational underlying information you could want. We have it both in, Word form, but we've also, partnered with a studio and have a bunch of snazzy videos that if you'd rather watch a video, if you are more of that TikTok audience, you can still learn about all these different strategies, in the format that you want. It's not whether you want to listen to a podcast or read a book or, listen to TikTok about how to, gain information about options. As long as you're learning how to do it responsibly, I'm happy to provide, that format for you. And I think the other important part and the other responsibility that we undertake is not just putting up a blog post that says, hey, here's options 101. Okay, now go trade whatever you want. In the app, we have helpful things that say, hey, here's your break even. Here's how much you could lose. Here's how much you could make. Here's where the stock price, has to go in order for, this strategy to actually make you money. The spread is actually, wider now than it has been historically. Maybe you should consider, that now is not the best time to do that. Because I think retail, there are very distinct ways that retail is set up to lose money in this game. And I don't think those are very well pronounced throughout the retail industry. So for instance, during volatile times, bid-asks are wide, Folks are paying 9%, 10% just in bid-ask prices, just in the spread before they even get into the trade. Now you got to make up 10% of the spread before you even get to making performance. Not closing out your options after earnings announcements and getting destroyed as the volatility, goes back down to normal levels. So I think there are these little nuances that may seem very, very obvious to traders who've been doing this forever. But for someone who just looks at a stock and says, hey, I think that's going down, I'm going to go buy an option, the stock goes down, and so does their option, they're like, what happened? I thought I was going to make money as this thing went down. Why did I actually lose money too? And so I think it's those nuances that it's also, unto us to help, surface up in the app and make sure, you kind of get some of those more finicky details that you might not be getting from others.
Oh, you're right. The devil is definitely in the details when it comes to options. So in addition to having, the online offering and the videos, it's also important to have people on staff, people ready to go who are experienced in the option space, whether they're educators, whether they're on the trade desk, actually fielding the questions from the people like you mentioned on earnings day when people are confused what's going on with their vol. You have people on the desk who can tackle those questions. So do you have those people at Public, the people with the deep options expertise who can tackle those questions, Sam?
Yeah, we do. We have a couple folks on our team who are definitely deep in the options, licensed out the wazoo. They field the more difficult questions that, we get through our channels. So we definitely have, in the past have received, great accolades for our customer service. We find they're pretty timely, pretty responsive, and generally, get folks what they need. But to your point, yes, options is a fast moving market. We got to be ready. We got to be, you're responding to people, as soon as we can, certainly before, the day is up, responding to make sure that we don't exercise people when they don't want. But then to your point, hey, I thought this trade should have gone this way. What happened? Can you give me some color on, the execution price here, or things like that? So, for instance, during halts, what's going on? We had a couple of those things earlier this week. So there's always something new. And, we definitely have to make sure that, the folks on staff are able to answer any and all questions, that come through the door.
Well, speaking of questions and indeed comments, it seems like you're making converts of our pro listeners here, Sam, because we already have a couple of people here, Options Queen and Frank, both saying they're opening accounts right now as they're speaking. So you sold 2 new accounts while you were talking here, Sam. So I guess keep it up. They're liking what you're putting down. We also have a question about PFOF from the live. You think you want to tackle a live question about PFOF, Sam?
I will tackle it if I can.
All right, let's see what they have for you. They say, this comes from one of our pro members, Age of Delaquarius, who says, do brokerage firms make more PFOF money by closing out customers by hitting the bid when selling them out rather than trying the midpoint? So he wants to know how much effort goes into the execution when closing out these trades, and do they make more payment based on where the trade is executed, or is it a standard rate?
So as I kind of alluded to before, every firm has bespoke agreements with all these other firms. So for instance, for us, right, every single trade, 45 cents. So whether I get filled at the midpoint, whether I get filled at the bid, whether I get filled at the ask, whether I get filled anywhere in between, I make the exact same amount of money. So that does not factor into our consideration, right? When we're making these calls at the end of the day, it is 100% risk. We are closing people out to both, save themselves and, for us, save the firm capital as well. And so I think, at least for us, those considerations do not come into play, at the end of the day when we're closing people out. It's purely a risk decision. There are other firms out there, to your point, who, whether it is a maker or a taker, kind of trade, they will get different rates based on how they put that trade through. And I would hope that those are not the decisions that come into play for those firms when they're making those decisions. But I can only speak for ourselves. And for us, it is purely a risk decision at the end of the day. There's zero economic decision that is factored into it.
There you go. Our audience deep in the weeds, even on PFOF, Sam. But they're opening accounts, so obviously they're interested. You mentioned crypto, and our audience is interested in that as well. We have a show every week on the network called The Crypto Rundown, where we get into the weeds of crypto derivatives. So if I want to trade crypto over there, public, what can I trade? Is it just spot BTC, or do you go down the rabbit hole?
We're a little bit down the rabbit hole. We offer currently, there's 7 direct coins on the platform. All of our services are offered through backed crypto services. So we've got Bitcoin, Ethereum, also really popular Doge, Shiba Inu. So we do have some of those meme coins that people like to trade and that are not available through the traditional securities market. So as we're on this topic, right, not surprising, the Bitcoin ETFs have been hugely popular among our investors. Originally, I think it was a small fraction of our overall crypto trades. Most people still preferred the coins. But now we're actually seeing the traders, right, not the buy and holders, but the traders, they're gravitating to these ETFs because, hey, spreads are tight, right? It's free to trade them, right, generally on most platforms. And so the trading vehicle for a lot of people is actually the ETF now in the Bitcoin game. And I expect the same will be true of the Ethereum ETF. One interesting thing is, we certainly can't wait for all these options to come live on these ETFs. Because if you can imagine, right, I mean, IBIT is a top 2, top 3, top 4 name daily, on our books. And when the options come out, you can imagine, the volumes that these things are going to see. And so we've been in contact with, SIBO, we've been in contact with the CFTC, we've been in contact with the OCC. It's still really gummed up, down in Washington. We're still waiting on resolution. We're really hopeful within a couple of months that the OCC gets approval to list options on these ETFs. But so far, still got to call your congressman and push it forward.
Interesting. Within a couple of months. So that's more optimistic. I just took the pulse of a lot of the industry players down at the OIC conference a few weeks ago. And a lot of them were, I think it's fair to say, a little bit more dire on the prospects of seeing the options on the Bitcoin ETFs even this year. So you think in a few months. So that's a little bit more optimistic. We're going to hold you to that, Sam. If we don't see him in a few months, we're coming back at you.
I mean, I think everyone wants it, and there's not really a legitimate reason for them to continue to hold it up. I think it's really just bureaucracy, red tape, and someone just is searching for a way to say no, even though there's not really a way to it. So certainly your contacts may have more up to date information than me. We keep pushing them, but we think these are going to be huge. I think everyone thinks these are going to be huge, and so I think as long as they can do it safely, it's going to be a great product.
It is kind of absurd that in the year 2024 we can approve an underlying, but they will not approve buying a put on set. That's too far. That's a bridge too far for the regulators. I thought we were past that in the year 2024, but apparently not. Everything old is new again in the world of options, including getting hung up on approving said options. We got a couple more here for you, Sam, catching up on some of the hot button issues that we got the pulse of the industry on down at the OIC conference a few weeks ago. One of them, when we polled our audience, Sam, we said, what do you want us to talk to everyone about at the OIC conference this year? One of the results was overwhelmingly favorable. Like 75% wanted us to talk about 0-day options. It's the hottest thing going right now, Sam. You may have heard of it. I'm not sure, but a hot thing right now. Let's start. Where do you fall on the whole 0-day thing? For as popular as they are not without controversy. There are quite a few people out there who still think these are just gamma bombs lurking, waiting to go off at any moment. So let's start there. Where do you fall on the whole 0-day phenomenon? Yay or nay, Sam?
We're all for them. We take a very, very neutral approach. There's a lot of things you can trade on our platform. There's a lot of things that I think used irresponsibly, you can get in trouble with. These are no different, right? These can be a tool that you can use to, help build wealth or, protect on the downside. But to your point, right, they can also be a tool used to just gain leverage, irresponsibly. So I think we're of the mindset with proper education, with some guardrails that are pretty wide, right? There's no reason that, these should not be available for our investors to trade. Having said that, I think, they are relatively volatile instruments that do have the capacity to lose a lot of value very, very quickly. So I think that's going to be on us as the firm, to make sure that people know what they're doing. When you're buying this, do you understand the risks? And I think that's where we fit in. We are not the arbiters of, hey, you should or should not do this. It is, do you have the information, the tools at your disposal, to make a responsible decision so that, wake up tomorrow and are confused why your account's down.
And the other big question, we were talking, of course, about Bitcoin ETFs being approved. The other product everyone wants to see in our audience tomorrow, if not yesterday, Sam, is the 0 DTE, but on the other products that they trade. So you mentioned NVIDIA is hot. Of course, they want 0-day NVIDIA, 0-day Tesla, Apple, all that fun. What are you hearing in terms of the scuttlebutt behind the scenes as to whether we'll see these anytime soon, Sam?
So it's funny. The news that I've been hearing, and this is all second, third hand, who knows? But the larger players are very, very worried. A lot of them are dealing with data technology. They've got pretty big, bulky back offices. They're already struggling to handle the risk of these things and closing out folks on a daily, on a weekly basis. And so I think a lot of the pushback has been from these really large bulge bracket firms who just frankly don't want to deal with it from a risk perspective. They don't want to, put in the extra infrastructure. They don't want to hire the extra people. They don't want to deal with the, larger potential losses that could arise. So I think everyone knows we're going to get there. It's just a matter of how long can folks delay so that they have more time, to properly handle it when it does come down the pipe.
Speaking of getting there, one of the other big controversies we saw break right around the time that we were going down to the conference was NYSE stirring up the waters, polling their members on whether they should go 24/7 or maybe 24/5 on the trading front. Some of your competitors in the space already approximate some of this functionality right now, so they're kind of taking those half steps there. Where do you fall on, let's say, 24/5, not even 24/7, just straightforward 24/5 in the stock world? Do you think it's inevitable? Its time will come? Do you think maybe we should delay it a bit? And also, for our perspective on the options front, what does that mean for the options market going forward?
So I think we will certainly, hope to launch 24/5 by the end of this year. Again, I think, the more ways you can trade, the more times you can trade, the better, more ways you can get in and out of things, the better. So we are all for, these markets. I think the crypto markets have shown it very well. 24/7 markets, not really a problem if the infrastructure is there. I think the problem in the securities world is we're still not there from a technology perspective. We just went to T+1. That was great. Not too many hiccups, but, kind of even going further than that, I think folks are worried about. But having said that, I think everyone in the industry wants to get to 24/7. They want everything to be as, low latency as possible. Everything should settle, as instantaneously as possible. So I think we're moving in the right direction. And I think it's inevitable that a lot of these things will be trading 24/7 within the next 5 to 10 years.
Well, Sam, that music means we've come to the end of our little chat. I appreciate you taking some time out of your day to update our listeners on what's going on the options side and indeed beyond. over there at Public. Now, we touched on, of course, all the strategies being available sometime around Q3, more of those tools and screeners coming online sometime around that time frame as well. That said, if there's anything else up your sleeve, maybe some hints, some teases you want to leave with our audience for what's coming down the pike over there at Public, now is the time, Sam. The floor is yours.
Thanks so much, Mark. It's been great here. As I said, we just keep building. We've got pretty much all the assets you want. Got a lot of education coming, more strategies on the way. I think, margin trading we didn't touch on, but that is, I think, another something that's coming down the pipe and will be ready for Q3. So not only, more different strategies, but, you actually be able to trade with leverage, right, with all the pros and cons of that. So maybe at some point we'll chat about that in the future, Mark.
A lot to chat about, sounds like, especially in Q3 as all this new stuff comes online. And I'm sure, just checking at our pro chat, a lot of folks are intrigued by what you're putting down here, Sam. A lot of them opening accounts. I'm sure you'll be hearing from them in the near future about what they like, what maybe they're hoping to see coming soon. So look forward to that. If you want to check it out for yourselves, listeners, are pretty easy to find. Just public.com or find them on the old X/Twitter at Public. Sam, we'll definitely look forward to seeing how all these new offerings on the options and other product fronts, how they unfold in the marketplace in the coming months.
Thanks so much, Mark. Appreciate it.
That music means we're done with the interview today, listeners, but don't worry, we're not done yet on the network Hangout in the Pro. We'll be back in a little bit, 20-odd minutes for this week's Pro Q&A session, joined by our good buddy, Mr. Matt from OIR, breaking down all of your strategy questions, back test, data galore. If you haven't gotten your questions in, get them in. It's going to be a fun one. Probably oversubscribed with questions already, but you know what? Send them in. The more the merrier out there. It's going to be a fun time. Then, of course, back again tomorrow for our double dose of education with our buddy Mr. Dan P. on Options Bootcamp. Still the premier options education program out there. So you're getting not one, but two OBC episodes tomorrow for you pro folks. Everybody on the on-demand side will be getting those unfolding on the podcast side in the coming weeks. Back again on Thursday, of course, for the option block with our friends over there at SIBO, followed by TWIFO with our friends over there at CME. And then Friday, of course, Volatility Views. Who will join us to talk about vol this week? Got to tune in to find out. And then, of course, one final time for you pro folks, we come back for a little bit of options oddities to talk the unusual activity. If you too want to join us in the pro, get all this stuff early, get the giveaways, get, of course, the two exclusive shows, Pro Q&As, and indeed options oddities. Only one place to go, theoptionsinsider.com/pro. Then we'll see you back here next week for more great interview and Pro Q&A content coming soon.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.